country. Baker, our CRM platform, can be found in over 1,100 dispensaries across the country, helping dispensaries grow their business and build relationships with their customers. Our clients leverage our platform to understand who their customers are, what products they buy, and communicate with them. Our clients currently sending out tens of millions of messages each month to drive sales. Our distribution inventory management business reaches more than 800 dispensaries and works with hundreds of brands across Nevada and California. At the wholesale level, Blackbird transports over $20 million worth of product per month to dispensaries. Blackbird also provides a robust inventory management system as well as door-to-door on-demand delivery service in California and Nevada, with other states coming online soon. Now fully integrated, these tools help brands and retailers understand their customer purchasing patterns, manage their current inventory levels, and even physically handle the B2B wholesale distribution of products, as well as final mile delivery to the customer. No other business provides that suite of services at this scale. And lastly, our consumer device packaged goods business houses our industry-leading Jupiter Research. Jupiter, which again I co-founded, develops and manufactures state-of-the-art vaporization hardware. Capitalizing on 5 years of experience in inhalation vaporization technology, Jupiter positioned itself to be our customer's technology partner. Jupiter manages quality control through the entire supply chain, from sub-tier suppliers through final assembly, providing among the most advanced technology and reliable products in the industry. Today, Jupiter serves over 800 customers and ended last year on a $150 million revenue run rate, less than 3 years after inception. Jupiter intends to maintain its place as the category leader through fundamental research with our own in-house scientists and engineers working closely with our R&D manufacturing partners overseas. Now part of Tilt, Jupiter is leveraging the Blackbird distribution network to get products to its customers faster and more cost effectively, as well as generating new hardware sales leads from existing Blackbird and Baker customers. As the U.S. cannabis landscape is so diverse, one of Tilt's core thesis is evaluating each market on a case-by-case basis. This means only cultivating cannabis in markets where we need to. To date, we have cultivation facilities in Massachusetts and Pennsylvania, as we believe these limited license markets will continue to have high ROIs. As we look to expand across the rest of the country, many markets on our list will not include cultivation. Instead, we'll look to leverage our software, distribution, hardware solutions, along with a production license in each new market to focus on manufacturing products from a wholesale supply that is widely available and cost-effective. In 2019, thus far, Tilt is already seeing the advantages and synergies of bringing these businesses together. Moving forward, we believe Tilt will function as a robust and nimble operating platform to pursue and absorb the right incremental and adjacent opportunities to scale into new states and lines of businesses, while growing toward a strong EBITDA and free cash flow profile. Stepping into this interim CEO role, I intend to run a tight operation based on my experience scaling Jupiter Research to the success it is today. The rest of our leadership team are experts in various facets of the cannabis industry and include experienced entrepreneurs as well as seasoned executives from Fortune 500 companies. As we've been discussing today, Tilt is a substantial business. We are among the top 5 revenue-producing U.S. cannabis companies in this dynamic industry. In my first 100 days, I have 5 key priorities I would like to touch on briefly. Number 1, ensure an effective integration of Tilt's businesses. Tilt has exceptional assets, and my team and I are spending our time making sure that we get the right mix of shared services versus what should be managed at the business unit level. While we touch every point on the supply chain, we want to make sure that our businesses can take advantage of centralized resources, but stay nimble and continue to provide best-in-class service to each business unit's customers while maximizing revenue opportunities. Number 2, focus on Tilt's operational structure, internal communication, and KPIs. In merging together and now operating Tilt's various businesses, our operational needs to remain focused on our four primary constituencies: customers, partners, employees, and shareholders. To do that successfully, my leadership team and I are putting into place daily, weekly, and monthly communication around shared metrics and KPIs. We also want to continuously evaluate and empower the right people in order to act on the timely insights coming out of our operational processes. High growth businesses are about tight management, consistency, and follow-up. Right now, each of my direct reports has weekly update and review meetings with their staffs, and we have a weekly management call among the leadership team to both update and problem solve. We also are embracing regular, in-person, deep dive ops reviews to get everyone into the same room and into the weeds together. Dave, as CFO, has been driving the company to much greater efficiency, cost discipline, and capital allocation around growth and alignment with General Electric's rigorous financial management approach. The finance team has moved us to regular monthly closings, implementing a zero-based budgeting approach, and on the procurement side is performing monthly vendor-level reviews to ensure we are getting the best terms and best partners. Number 3, the proper allocation of capital is paramount. Right now, we are evaluating every dollar spent to ensure there's an appropriate ROI associated. As an operator, I've been focused throughout my career in assessing opportunities in a rigorous manner and directing capital initiatives with a careful assessment of risk and reward. Tilt has the balance sheet and capital relationships to drive our robust growth plans. Now, as we integrate our businesses together, we are embracing a growth roadmap that lets us scale our winning strategies rapidly while keeping a thoughtful cost discipline at every level of the organization. Tilt needs to be very disciplined about how we direct capital growth levers in new M&A, not just from a capital perspective, but from organizational management bandwidth lens as well. We have said to a number of M&A deals in the past few months as we focus on integrating our recently completed acquisitions, and will continue to be disciplined on M&A opportunities that are at an unsupportable price or entail prohibitive terms. Number 4, improved communication with our stakeholders. As I've shared previously, I'm certainly aware that Tilt's story, strategic advantages, and ongoing progress needs to be shared in a simpler and more compelling way with our shareholders, prospective investors, and the public. I will be working closely with my team to deliver better and more productive communication between Tilt and our stakeholders. To our analysts and shareholders on the call today, let me assure you directly that we have heard the investment community loud and clear. There are still many growth levers in the Tilt story. We are committed to continually improving our dialogue with our shareholders and prospective investors. Number 5, completing the recruitment and evaluation process for a permanent CEO. To position ourselves for 2019 and beyond, we are actively strengthening both the governance structure and leadership of our company by bringing in more executives with direct operational experience. One key initiative in this regard is the CEO search process. I stepped forward to be interim CEO to bring a necessary operational discipline to Tilt. I also recognize and accept that for the sake of Tilt as a growth business, a cannabis innovator, and importantly, a public company, it is crucial at this growth juncture for Tilt that we should be rigorous about identifying and bringing on board the right talent in the chief executive role. The board is working closely with an executive search specialist for this process, and the board is currently assessing candidates. As part of the search, I am one of those candidates being actively considered by the board. We expect this process to be completed by fourth quarter of 2019. I'm excited about what is ahead for our company. As complex and dynamic as the cannabis industry is, what is also clear is that this is once in a generation opportunity to build a leading position in an $80 billion market. Tilt as a B2B provider is delivering an unmatched suite of services and products to the cannabis industry. Today, Tilt is one of the top 5 U.S.-based cannabis companies by revenue in the market. I want to make sure all of our stakeholders and prospective investors understand that and keep Tilt top of mind as it should be. Now that I've shared with you my operational perspectives, let me turn it over to Dave for our fiscal year 2019 first quarter results. Dave?
Thanks, Mark. Let me walk through our results for the first quarter 2019. Reported revenue in the first quarter was $34 million. There was no revenue in the comparable period in 2018. Pro forma first quarter 2019 revenue was $40 million, up nearly 3 times from revenue on the same basis in the first quarter 2018, representing growth of 169%. Before going further, I want to remind everyone that reported revenue in first quarter 2019 only includes approximately 2 months of revenue contribution for Standard Farms, Blackbird, and Jupiter Research, whose acquisitions were completed after the beginning of 2019. Given the number of M&A transactions we have completed over the last year, and therefore the partial quarters and partial years of revenue contribution in our financial statements making year-over-year comparisons more complex, we think it is important to provide pro forma revenue and adjusted EBITDA that we expect to be helpful in the supplemental analysis of the performance of our business. Please see our reconciliation of non-IFRS measures in our detailed financial presentation on the investor portion of the TILT website. Pro forma gross profit in 2019 was $8 million compared to $4 million on the same basis in 2018. First quarter pro forma EBITDA, adjusted for certain one-time non-operating expenses, including stock compensation expense, goodwill impairment, inventory impairment, foreign exchange and integration, was negative $7 million compared to negative $3 million in the prior period. While TILT's pro forma adjusted EBITDA loss and in absolute dollar terms increased in the first quarter 2019 year over year, pro forma adjusted EBITDA margin was in fact up 330 basis points year over year to negative 18.4%. This improvement in profitability reflects our operational investments into the business over the last year, which both supported a significant increase in scale and operating leverage. Now let me turn to the highlights of our 3 business units. In our software and services business unit, which Mark touched on earlier, we've seen continued growth on our SaaS and distribution solutions. We continue to expand the number of dispensaries that we enable via our CRM software and expand our delivery and supply chain services. In first quarter 2019, we expanded our reach into the greater Los Angeles area, a geography with an addressable population of more than 18 million people and thousands of businesses. In consumer and packaged goods, Jupiter was up 3 times year over year in the first quarter of 2019, driven by research and development, attention to the supply chain, and vaporization solutions regularly rated among the highest quality in the industry. Jupiter continues to focus on scaling in international markets, and in the first quarter we accelerated our expansion into Europe, specifically in the UK and Israel. Lastly, in our cultivation and production, in Massachusetts, our dispensary in Taunton is open for medical use. Construction is completed for 2 other dispensaries and awaiting CCC approval. TILT remains focused on licensing for adult use in 2019. In Pennsylvania, TILT closed the Standard Farms acquisition in January, and now we're in the process of completing site expansion to double cultivation and processing capacity. We also continue to make continued investments into genetics capabilities in order to derive biological asset productivity and meet customer demands. TILT ended the first quarter of 2019 with cash and cash equivalents of $12 million. There was no debt as of March 31st, 2019. Subsequent to the end of the quarter, TILT secured a $20 million credit facility to be utilized to fund existing and future growth projects, discipline future M&A activity, and general corporate purposes. Let me end my commentary today by sharing with you that we see revenue momentum in 2019 across our businesses. As Mark discussed at length, TILT is putting into place an institutional caliber operational playbook that allows us to place timely capital behind our wins and discipline in our process and expenditures. To that end, we expect that in fiscal 2019, our operational focus will allow us to pursue a range of EBITDA margin initiatives that expand our operating leverage across our businesses. I would now like to turn it back to Mark for final comments. Mark?
Thank you, Dave. Before turning to questions, let me just recap. TILT's 4-way merger and subsequent acquisitions has created a compelling value proposition for customers, investors, partners, and employees. TILT's businesses today, in combination, are one of the largest U.S.-focused cannabis companies by revenue in the market, with category-leading business units that span device packaging, goods, software and services, and cultivation. Tilt is uniquely positioned in the U.S. market to provide products and service to brands and retailers across the country and internationally. We are committed to keeping all of our stakeholders informed as we scale, realize operational synergies, and maintain our position as a B2B leader in the U.S. cannabis industry. We'll be happy to now answer your questions about Tilt and our first quarter 2019 results. First, the operator will open the line for any equity analyst questions before we turn to the questions that we have received from shareholders, as well as retail and institutional investors, including via our open webcast question submission system. Operator, are there any questions from our equity analysts?
Yes, we have a question from the line of Bobby Burleson with Canaccord.
Yeah, good morning.
Morning, Bobby.
So just curious, now that we're pretty much done with May, just any color on how Q2 is looking. I understand it's more of a second half weighted year in terms of revenue and in some of the leverage you're talking about, but any color on progress so far in Q2, highlights that you might want to call out.
Sure, Bobby, I'll take this one. We feel really good about revenue growth as we go through the year, especially as Jupiter continues to scale and our software and sales business continues to extend our distribution and customer relationship reach. As we highlighted in California, the big thing for us is going to be mass recreational licensure that we expect to come online in Q3 of this year as anticipated. So if you look at the $40 million of pro forma for Q1 compared to pro forma Q1 a year ago, that's approximately 3 times the revenue, or 169% up year over year. So for full year 2018 pro forma, we had $98 million. Do we think we grow in full year 2019 over 2018 the same way we did in Q1 over Q3? That's really the question. So we feel really good about the progress we made in Q1 as a business. I think we'll continue to see expansion in Q2, and it's really going to come down to the timing of Massachusetts recreational license in the back half of the year. That's going to provide the growth that we're anticipating for the year, and we're optimistic and doing everything on our end to support that, and hopefully we have timing on the licenses line up as we anticipate.
Okay, and the quarter just versus your kind of internal plans, any highlights in terms of how this quarter's tracking? I understand the vape hardware business is still a big component of the revenue, so is that business healthy in Q2?
Yeah, I think so. I think the Jupiter growth story has been incredibly impressive, from about 20 million to 77 to we're predicting a sizable number this year, and the business has had incremental growth month over month in the year. So we continue to see that growth continue as the months go by, and we're hoping to have a positive Q2 outcome from that as well.
Okay, and then just looking at the rec opportunity in Mass, curious, any update on what's happening with affiliates there in terms of your plans, of helping third parties monetize their licenses and growth beyond your kind of 3 rec stores that you're going to own internally?
Sure. Massachusetts, obviously a very interesting market that we're all focused on. Clearly, it's a bit behind where most people thought it would be, until, along with nearly every other business that has mass operations, has shifted our revenue expectations accordingly. We're eagerly awaiting our adult use licensure for Taunton, Brockton, and Cambridge retail locations, as well as our cultivation and wholesale businesses out of our Taunton facility. We have high expectations for revenue EBITDA that will come out of Mass once these facilities are licensed and fully operational. So overall, we're looking to get our 3 stores open in Massachusetts from a recreational basis, that being Taunton, Brockton, Cambridge. And then, we are diligently working on outlets for wholesale as we have cultivation operations in Taunton expanding, a genetics team focused on yields. Any excess inventory that comes out of there, we are looking to establish an infrastructure with partners in Massachusetts to be able to sell that inventory and obviously help our top line continue to grow.
And I'd like to add, we're carefully evaluating our supply contracts just to ensure compliance with the CCC.
Okay, great. And just in terms of your cash on hand, you took out that you have that $20 million credit facility. How much have you drawn on that at this point? And what are your cash needs? As we look to the second half, I know that you're ramping, expanding production and other CapEx intensive activities.
Yep, sure. So we finished Q1 with about $12 million in cash at the end of March. And, the difference coming off of the end of the year was mainly M&A driven. We obviously had a high number of M&A that was completed in Q1, mainly Jupiter, Blackbird, and Standard Farms. And the other main item is, given the Massachusetts market, we've also had CapEx expenditures, mainly due to our dispensary build-outs as well as our cultivation facility. So I would note that level of activity for M&A in Q1 was really specific to just getting kind of the assets that we're looking for. We don't expect that to continue going forward. We're going to have a very, very disciplined, conscious M&A focus going forward. And that's not reflective of kind of our monthly or quarterly burn that we'd expect. And, one of the things that myself and Mark have been doing is putting a really big focus on where our expenditures are going. As Mark mentioned before, we've done a zero-based budget. We are doing vendor reviews and really evaluating every dollar that goes out the door. So I expect our burn rate to continue to decrease over time. And the other dynamic going on is we've had to do a significant level of CapEx to build in Massachusetts. We think that's going to be winding down over the next few months, which will also help the burn. We have a tremendous set of assets. We're extraordinarily excited about them, and we're obviously continuing to look at capital raise options, and obviously a lot of interest from folks in terms of supporting us in that effort. And our hope is to announce something in the near future, but we're making a lot of progress on that front.
Okay, great. Well, you kind of answered my next question there. So I'm going to go ahead and jump back to the queue, and appreciate you answering my questions.
Of course, thank you.
Thank you. We will now turn to online questions.
Yeah, getting a lot of interest online, so thank you for that. Actually, Bobby definitely touched on some of the most popular questions, specifically pertaining to the cash change. But I guess one question too is, Mark, why are you not taking on the role of permanent CEO?
Well, okay, let me reiterate. I'm fully committed to Tilt as a shareholder, board member and operator. To that end, I believe strongly that the board should, in fact, truly be rigorous in evaluating, a permanent CEO candidate. As a shareholder, that makes sense to me, and I'm going to be part of the process.
And then, can you guys give more detail on the non-cash stock option expense in the first quarter?
Sure, I'll take that one, Joel. When Tilt was formed through a four-way merger and went public, there were incremental options awarded to founders within each of the various businesses, as well as additional options issued to new executives who brought on board. It's important to note that nearly all of these out of the money options are priced at 525 Canadian. So while the line item flows through our financial statements, given the Black-Scholes calculation of option value, these options don't have much meaning today in the short term. These holders are thinking like the rest of us and everyone on this call about the operational and strategic steps to get above 525 Canadian and beyond. What I can say, however, is that this incremental grant was not structured optimally from a vesting cadence perspective. And we're going to revisit these grant agreements in the spirit of partnership with these particular holders in the near term, as we think this non-cash expense around these options is creating unnecessary complexity when everyone from a practical economic perspective is focused on the same long-term value creation for Tilt.
Great. You guys are at negative EBITDA margin today. How does that change over time, and sort of what does the forecast look like for the rest of 2019?
Sure, I'll take this one as well. Well, first and foremost, you can see how our EBITDA margin improved in Q1 by 331 basis points, which reflects our investments starting to generate both top line and operating leverage, and we expect this to continue as we go through the year. Going forward, we expect there to be many opportunities to keep driving margin and operating leverage, both on the cost side as well as growth in the businesses, and that will cross into positive EBITDA territory within this year. Is that a single-digit EBITDA or low teens EBITDA margin in 2019? Well, I'd say that all depends on Massachusetts timing and our ability to create the infrastructure within the state within 2019.
I'm getting this one a lot. It was sort of answered when Dave gave the answer to the cash balance, but talk just a little bit more about confidence in sort of additional capital raising and sort of where we are with that process.
Sure. So we've obviously had a significant capital raise activities, in the past in terms of the RTO as well as private fundraising before that. And our team is out there every day talking to potential investors. Everybody's very excited about our asset base. We have a very valuable asset base. When we sit down and talk with investors about what's going on in the business, what Jupiter looks like, the growth story, the reach that we have in software and services, there's a tremendous level of excitement. So we spend a lot of time with investors telling them the story, where we see the future, and we've got a lot of really strong interest in terms of continuing to partner with us from a capital raise standpoint. And our expectation is that we will be able to wrap up something shortly and subsequently announce. But the Tilt story is very strong. As a top 5 U.S. operator, and we see tremendous growth in the future with a great set of assets. We think funding and capital raising going forward, we're in a very, very strong position.
Great. And then in terms of getting a little bit more detail around the different segments of revenue, when can we expect that?
Sure. We are, the company went public about 5 or 6 months ago, so we're in the process of refining our operating models for each of the business units, and we have certainly identified several sets of KPIs that matter to each of the businesses. As we build the systems and pursue the synergies inherent in bringing together 7 different businesses, we will plan on sharing more over the subsequent quarters, and I think that's a fair request. Right now, we're focused with Mark on providing more transparent communication, as well as continuing the growth within Tilt. And from my experience, I would tell you, having the right KPIs, operating rhythms, and metrics in the business is key to running a business. So the fact that we've got out a zero-based budget this year, have a monthly operating rhythm, and weekly cadences within our functions and overall business is a very positive sign. And as we get further along our integration over the next few months, we fully expect to have fleshed out KPIs and more subsequent granular detail in business units in which to talk about our business and kind of our growth trajectory.
And then a couple questions about, are you planning on any lockups for any insiders, or is there anything that we can expect for insiders or management in terms of their shareholding?
You know what, we're going to be announcing that soon, so please stand by.
Short and sweet. Again, a couple more questions that I think were sort of answered, but maybe just a quick reiteration on people asking about our monthly burn and sort of what that looks like in Q1 versus what to expect going forward.
Yeah, I'd say a few things. When I talked briefly about CapEx spend, and a large majority of our CapEx spend over the first half of this year has really been focused on Massachusetts build out, whether it be the 3 dispensaries that I mentioned, Taunton, Brockton, and Cambridge, as well as the Taunton cultivation facility. So as I mentioned, I think we are very far along in that process, and I'd expect the CapEx burn associated with those particular locations to decrease significantly as we talk about 2Q and especially as we get into 3Q. So on the CapEx side, I feel very strongly about that. From an OpEx standpoint, we have had a number of integration activities with 4 businesses merging together, as well as 3 acquisitions, and we've instituted the subsequent cost discipline, looking at every vendor, having zero-based budgets, and continuing to scrub to make sure we have a very disciplined cost approach as we go forward. And that's going to be key for Tilt getting to profitability and providing the right level of margins and returns that us and our shareholders expect.
Given that Jupiter is such a driver of revenue right now, can we talk a little bit about the differentiation between them and maybe some of their competitors, or any assurance that their business is going to continue to grow?
Sure. Listen. Jupiter is, we're acquiring customers, every day. Our larger customers, are extremely important, but becoming, since we're scaling it exponentially, our larger customers are becoming less and less a percentage of our overall revenue. It's great. We're developing a lot of new products that we're ready to introduce that will be introduced at a higher margin than existing products, and just got an exciting future ahead from a new product standpoint, as well as new customer acquisitions, and as well as the startup of really the legalization in Canada.
Great. And then a couple more still on that one-time or the non-cash stock option expenses. Just some clarification around, is that a new expense, or what's the origin of those, and what do we expect there?
So these are all previous grants, Joel, that I believe were done in 2018. So nothing new here. And as I mentioned before, we need to take a fresh look at the cadence and kind of the frequency of the vesting period here, and we include to do that very shortly. I'd highlight again that the strike price on these options is 5.25 Canadian, so everybody has a vested interest in continuing to drive profitability and growth in the business so that those are achieved. But we have to take a look and see what was done in the past, and if it's the right cadence going forward, to make the adjustments as necessary.
Again, can we explain just the difference, why talking about pro forma revenue and when we expect to talk more about actual revenue as opposed to pro forma, and what exactly is that difference between the 34 and the 40 million?
Sure. So we reported 34 million, and 34 million is the reported number, which reflects when our acquisitions closed. And we had a heavy M&A quarter with Jupiter closing, Standard Farms closing, as well as Blackbird. So we got a portion of January revenue for each of those acquisitions. As we assess the business and really what the year looks like, we're going to look at pro forma, which means if we had all these businesses bought on January 1st, what would the quarter look like? So that bumps us up to about 40 million. And I think that's a really good indicator of the growth and the size of our business going forward. So as we get to Q2 results, given no acquisitions in the Q2 time, no expectations in the Q2 timeframe, the whole pro forma piece of it, I think will phase out at this point. We'll be talking about very clear reported results as an indicator of our true revenue number.
And then obviously lots of M&A to date. People are asking about plans for organic growth versus continued M&A. I know Mark, you spoke about it briefly, but maybe just further elaborate on our plans for organic growth this year.
Yeah. So listen, every acquisition that's basically queued up, we're analyzing, very carefully, and assessing, what's really important to me, as CEO at this time, that we really manage our growth and make sure we have, the human capital and really the foundation of Tilt that's built, very strong, so we can, roll future acquisitions in, seamlessly.
Yeah, the thing I'd add too is we've obviously done significant investment in Massachusetts. So we have one medical store open in Taunton. As we get further adult licenses for the other stores in Massachusetts, that is going to be a clear path for revenue growth. I'd also highlight Pennsylvania. In Pennsylvania, we're in the final stages of expansion of our facility, which will allow us a large number of, increased production coming out of there, which is going to really help the landscape from our Standard Farms business going forward as well.
And then a lot of questions around outlook for 2019. Obviously, giving guidance is challenging, but maybe talk a little bit more about, Q1 period over period and thoughts on the year.
Sure. So we had 40 million of pro forma revenue in Q1 compared to pro forma Q1 a year ago. That's up approximately 3 times, as I mentioned, 169% year-over-year growth. Full year 2018 pro forma revenue was 98 million. Do we think we grow in full year 2019 over 2018 the same way we did in Q1 19 over Q1 18? That seems like a plausible zip code of growth. And we're going to continue to focus on the right discipline and operating metrics to achieve those results. and keep up the level of growth we've seen in Q1 for the rest of the year.
Can you talk about current debt markets available to Tilt, and what are your thoughts on the upcoming raise?
Yeah, I think we've had a lot of active interest, and the discussions are daily with our capital markets team as well as myself as we go through a diligence process. So our hope is that we can lock something in here in the short term and be able to announce. But in the meantime, we're being very conscious about our cash position, and we are working diligently to secure the next round of capital to continue the momentum and the growth of Tilt.
How much capital, I think this was answered in the speech, but there's a lot. How much capital did Jupiter raise prior to joining Tilt?
So Jupiter, since the inception, we had only raised $600,000. It started off with $100,000 seed capital, and then another $500,000. So a total of $600,000. We didn't take on another penny of debt, nor did we have to raise any more money. We grew organically, just through really efficiencies and creative capital, creativity over capital.
Are there any plans for, we actually already answered the part about Mark said a lockup coming soon. Are there any other plans for management to buy stock soon, and can we anticipate any news there?
Yeah, I think it's definitely something that we've talked about quite a bit. I mean, we've obviously been focused on integration and execution, but it's something I expect we'll kind of finalize a plan for in the short term and be able to have a communication out to the market with our definitive game plan going forward on the share purchase.
And then just a question on compressors. How many outstanding shares are there at Tilt currently?
Yeah, so on an uncompressed basis, we're looking at 358 million. So we obviously have the compression cycle happening throughout the year, but when fully vested, we expect that to be 431 fully diluted. Okay.
And then a couple questions around obviously the stock price. I don't know exactly how you answer that, but maybe talk a little bit about sort of why the market isn't judging Tilt the same way as our peers given Q1 revenues.
Yeah, good question. We get a lot. Acreage and other industry,
Sorry. Question is just where our current market cap compared to our peers. Where are we at? Why are we trading where our stock is? Can you comment on where the stock price is, and what's the biggest misconception around the Tilt story?
Yeah, I think I give you my view. I mean, Tilt is a relatively new company. We've been public for about 6 months, and bringing 4 companies together is a pretty significant task. Combining that with 3 acquisitions is another set of tasks. So, for us, we want to continue to put up strong numbers and execute. And as a function of that, in parallel, we also have to continue to really tell the Tilt story and where the synergies and how we're going to continue to grow in the future. And as a company this early in the game, I think we need to put more work around that. And we were discussing this yesterday. Our plan is to come out, I'd say, in the next month or so with more clarity in terms of what the strategic focus is and more granularity in our plans, which we haven't done as much now. And, hence we have new operations focus with the leadership changes, and it's all going to be a positive story. And we hope to come out, very soon with more granularity on what the strategy is going forward. And look, our internal view is we love the assets we have. We're very excited about them. We need to continue to show the market that we're going to continue to grow and execute and get profitable. And in parallel, we need to continue to do a better job telling the Tilt story and where we're going as a company.
And then can you talk a little bit about the difference between Tilt versus some of your peers / kind of the MSO model?
Yeah, you know what? We get that a lot. Multi-state operators cultivate, process, and ultimately retail cannabis. MSOs, because they are typically fully vertical, integrating, set up to 2 to 5 or 15 to 50 dispensaries. per state, and then go, fight it out state by state. Till is not their competitor for the most part. We're a facilitator for MSOs. We want MSOs like Acreage relying on our hardware products like Jupiter vaporizers or a wholesale cannabis plant or packaged white label goods. Tilt acts, and provides solutions across the value chain. And that's why, our reach is so much greater than many of our top, 10 U.S. cannabis companies. We measure our reach in 40 states, including CBD products or 1,500 brands and dispensaries. Our goal is to penetrate, the market via, superior distribution and customer relationship management, and then be a contract manufacturer or white label provider of dispensaries and brands. And yes, in the case of Mass and Pennsylvania, we will do that via touching plant cultivation, also direct retail facilities.
Can you comment on potential U.S. listing for non-plant touching assets?
Yeah, I can. Don't really have a lot to speak on that, but I think that opportunity to separate, what is non-plant touching, out of Tilt, and there's always the opportunity to uplist to a U.S. market.
And then what are your thoughts on timing for Massachusetts, and how does it play into our revenue forecast?
Yeah, we continue. I would say internally, we're focused on the things that we can control, which, getting construction done for our sites, which are in a very strong position, working with local municipalities on host community agreements, and any requests from the state and the CCC to approve licenses. So, right now we're targeting, Q3 in terms of recreational licenses, and we're doing our best to comply and give the CCC everything we need to get those across the finish line and be as collaborative as we can within that process. So that's our plan right now, and hopefully stick to those timelines. And we've obviously done a lot of work in Massachusetts, and we're looking forward to executing here and showing some of the revenue growth that we anticipate.
Great, and I apologize as we're winding down on time. Just kick it back. I don't know, operator, any other questions from the analysts on the line as we wrap up here?
No questions at this time.
Great, and then I guess sort of last question: if cannabis becomes federally legal, will you apply to be listed on the NASDAQ?
Look, I think it's something we'd always consider. So, we're open to all the options going in, and the opportunity for capital would be good, and so I think it's something we'd always look at, and we'll see what happens in the future. Mark, anything on your end?
No, I think okay. I mean, I think that was a great set of questions, for today. Thanks, Dave. Thanks, Joel. Thank you to our analysts, shareholders, investors who joined us today for Tilt's Q1 earnings call. Look forward to joining you on the second quarter call coming up shortly.
Thanks all.
Thank you.
Thank you. This concludes today's conference. You may disconnect your lines at this time. Thank you for your participation.